Answer the question. I'd like to call to order the June 13th, 2024 meeting of the Fitch-Rona EMS District Commission meeting at 7 o'clock. Roll call.
Sure. Michelle's not here, so I'll take care of that. Wheeler. I just saw Hilla pop up on the screen there.
Yes, I'm here.
Roberts.
Here.
Lonsdorf.
Here.
Paul.
Here.
Lugenbuehl. Lytle.
Here.
Johnson.
Here.
And McHenry. I don't know if you want to do a quick introduction. We have 2 new members this month.
Yes, please.
I'm here too.
Oh, I'm sorry. Dostalik. Gotcha.
I was making them.
It wasn't very. Yes. Do you want to self-introduce?
Sure. Thank you. I'm Debbie Paul. I'm town board supervisor in the town of Verona, and I was asked to join the committee since I'm on another committee that only meets like two times a year almost. So I'm and look forward to working with you. So appreciate it. If you know me or you recognize me, I own a small business in the city of Fitchburg. So thank you.
Well, welcome.
Jeff Dostalik, Deputy Chief with Fitch-Rona. I've been on staff since 2015.
And I'm Derek Johnson. I'm a citizen appointee for the city of Verona, and been on the committee maybe like 4 years, and currently the chair.
I think everybody knows who I am. Patrick Anderson, EMS Chief.
I'm Jim Roberts, citizen representative of Fitchburg. Been here for about 7 years.
Patrick Lytle, new alder in the city of Verona, and as I told Chief Anderson, had the good or bad fortune of riding in a Fitch-Rona EMS with my nearly infant daughter, and appreciative of the great care that they took care of us, and that there haven't been any more subsequent rides.
And David Lonsdorf, this is starting, I'm in my 4th year now on the commission. I'm a representative of the town board of Verona.
Connie, you're up. I saw you were driving, so I don't know if you are just listening in or you want to introduce
Yeah,
yourself.
no, yeah, I'm good. This is Connie Hilla. I'm citizen from the city of Fitchburg, and I've been in the committee for probably 6 years or 5 years, about that.
Perfect. Thank you. Welcome, everybody. Very much appreciative of the support we get from our community. So thank you.
Thank you. Next item is public comment. Any public comment that we're aware of?
There's none.
No public comment. Next up is for the new members, you probably see that the chief emails out a packet of all the stuff we're going to run through for the remaining agenda items. So we might go kind of fast, but just if you want to stop, if you have any questions about processing anything, we're not in a hurry. So next agenda item is review and approval of meeting minutes from April 11th, 2024. Anybody have any questions, comments, suggestions for the minutes? If not, do I have a motion to approve?
I'll make a motion to approve.
Do I have a second?
And second here.
All in favor signify by saying aye.
Aye.
Hi.
Anyone opposed? And there's probably 2 abstentions, right? Yeah, 2 abstentions and motion passes. Next up, we have a guest today. Thank you. We have a presentation of the 2023 financial review by the company Johnson Block. Do you want to self-introduce?
Sure. My name is Brett Hoffmeister, and I am a partner with Johnson Block and Company. Patrick, is there anything you wanted to go over, or do you just want me to jump in?
No,
Okay.
I have nothing.
All right.
It's all in you. Johnson Block's been doing our audits and I think you've been very much part of that for a long time. So
About a decade now, I think.
Yeah.
So yeah, we've been around for a little bit already. But yeah, I've been involved since we started working on the audit back around 2011 or 12 or somewhere around there. And here to talk about the 2023 financial statements a little bit. So provided a packet that just kind of pulls out some financial statement highlights. And I'll actually start on the page before a little bit just to go over just kind of at a high level when you're looking at the actual issued financial statements and report what it contains. So the first thing you see when you look at that document is the review report. So for Fitch-Rona, we've typically done a rotation of an audit every third year, and then in the off years we do a review. A review is less in scope than an audit. We don't do as in-depth of procedures. We're still providing some assurance over the financial statements that they're in accordance with accounting principles, but we aren't giving an opinion in the same way as we do in an audit. But we do still provide some assurance. Our conclusion in our review was that there are no material modifications that we see. Everything appears to be in accordance with GAAP. So that's kind of what you would typically expect to see when you're looking at a review. So no concerns there. Next year would be another audit for the 2024 financial statements. There's a couple set of financial statements when we're looking at governmental entities. You have a government-wide financial statement, which is a full accrual, and then a fund financial statement, which has financial statements for individual funds, your general fund, your other special revenue funds, if you would have any. Typically with special districts like an EMS commission, there's a general fund for your operations, and then maybe a special revenue fund for other types of activity. The funding assistance program money from the state typically goes in a separate fund here. But that is a modified accrual, so capital purchases are shown as expenditures rather than assets. And that's kind of what we have in here because that's how you do your budgets when you are for a governmental entity. There's also a set of notes to the financial statements which summarize significant accounting policies and significant account balances, give more detail on those, and then some required supplementary information, budget to actual information, information about the WRS, and other post-employment benefits. Moving on to the next page, we actually have kind of the financial statement highlights that I wanted to go over. That would be a summary balance sheet and then some summarized information about the activities for the year. So looking at your balance sheet at the end of 2023, there's about $2.4 million in total assets. This was up from about $1.5 million from the prior year. Cash increased, you had about $1.2 million in cash on hand at the end of the year. And accounts receivable also had a big jump. Most of you are aware of the issues with the billing company last year. For those of you who are new on the committee, so the district used to use Three Rivers. They were acquired by a company called EMS MC, and that was due to a unexpected passing of the owner of Three Rivers Billing Company that had to be taken over sooner. So there were issues with those billings and collections throughout the year, so that led to a higher receivable balance at the end of the year. So that's really what drove that increase there. That receivable is shown net of an allowance for uncollectible accounts, and that is, in the EMS run world, you don't collect everything you bill, so we have to show an allowance for that. That's kind of a recognition that we billed X amount, we're only going to collect Y, so we kind of show that as a net balance there to give an idea of what that's going to be. Looking at the liabilities, about $140,000 in accounts payable and accrued liabilities. The accruals are primarily payroll related, so payroll earned by employees in one year, paid in the next, pretty standard there. And then the unavailable run revenue, again, a large increase there. That's related to those collection issues. So with governmental accounting, you go on a run, an EMS run, and at the end of the year, that gets shown as a receivable on your books as of the end of 2023. But if you don't collect the money from that run within 60 days of year end, we have to show that as a deferral. So you don't show that revenue until you actually collect the funds. So that's what that unavailable run revenue is. It's runs you've gone on but have not collected the money for yet. So that had a large increase, but that was down to the turnover of billing companies and just the issues they had there. Even with that, you did have an increase in fund balance for the year. So the next section just kind of compares your unassigned fund balance to your next year's operating budget. Just under $4 million in total budget for 2024. You had just under $1 million in unassigned fund balance, so about 24% in unassigned fund balance. We look at unassigned fund balance specifically because that is what's available to meet kind of your regular obligations. It's not set aside for anything. It's not restricted for anything. So if you would have, unexpected maintenance on a machine or an ambulance, have to replace something that isn't in your budget, you've got those funds on hand, and it helps keep a smooth cash flow. So we generally recommend that be 2 to 3 months of operating budget, and so that 24% is well within what we would recommend. So healthy fund balance there, no real concerns. And then the bottom of the page just shows a very high-level summary of budget to actual for revenues and expenditures in total. Both revenues and expenses were over budget for the year, but the revenues were just under $4 million. Expenditures at the end of the year were about $3.7 million. So you had an increase in fund balance of about $243,000 for 2023. The next page just shows a little bit more detail of your fund balance because it can be broken down into multiple categories. So we start off with, when we're looking at these, it generally goes from least liquid to most liquid. So your non-spendable fund balance is generally your least liquid category. That's money that has been essentially used, but it is in a non-spendable form. So you've paid out for maybe insurance premiums or something like that that are going to be expenses for the next year. Or the other one is inventory, where you've purchased inventory that's considered an asset, but now it can't be used to meet another obligation. So we show that as non-spendable, about $195,000 in that category. The inventories are up a fair amount from last year, just having to purchase some fairly expensive medical supplies at the end of the year or during the year that weren't used up. The restricted amount, just under $1,000 there, that's typically the EMS funding assistance program money. Anything unspent there, that has to be used generally for training and equipment purchases. So that's a restriction, that's a legal restriction from outside of the organization. So that's a typical thing you see with EMS districts. There's some assigned fund balances set aside, about $251,000. These are essentially funds that the commission has earmarked for specific purposes. The largest one there is for future employee benefits, essentially setting that money aside so when somebody retires and they have like a large sick payout balance, that money is set aside to help cover that. And then the remainder is the unassigned fund balance of about $960,000. So in total, you had about $1.4 million in fund balance in both your general fund and that funding assistance program is money is set aside in a separate fund. So that the remaining pages are just a few historical charts, just kind of showing, trends over the last few years. I wasn't really going to go over anything in detail there unless anyone had specific questions on those. But I guess with that, I'll kind of open it up if there are any questions on the financials or anything else related to the review for 2023.
I have a question about on page 1, I guess it is, at the bottom, revenues and expenditures. You were going into detail earlier about how we have all this unavailable run revenue.
Mm-hmm.
Is $3.9 million worth of revenue, is that stuff we've actually collected, or is a large chunk of that like the $1 million that we haven't collected yet?
Everything shown as revenues is money that has come in. So that's going to be your municipal assessments, which is about $2.2 million, I think, for 2023. So that's all that money coming in. And then the other amounts would be run fees and other, there's some grant revenue mixed in there. I think run fees were about $1.7 million that had either been collected during the year or collected within that 60 days after year end.
Okay, so the $1 million of deferred, I think you call it deferred inflow of resources. That would be in addition to the $3.9 million that we actually have in the bank, basically.
Correct.
Okay.
And that is an estimate kind of based on your receivable balance at the end of the year, that net receivable balance. So it's not, it's not strictly $800,000 because we kind of estimate what you're going to collect based on your, your receivable, then your allowance, and then kind of come up with a calculation for what you think is going to be collected based off of that.
All right, and a lot of that is well-aged billing. It's like
Yes.
over 180 days, I think.
Yeah, the write-offs, that was a consequence of the turnover of the
Yeah.
billing companies, and the issues there was the aging, the write-offs slowed down, so there was a lot of older stuff on there. And so that, deferring that and showing it as unavailable kind of helps illustrate that when it is written off, it doesn't hit your income statement the same way because we haven't shown that revenue. So it's not like you would then have to take a loss on it because we have it in that unavailable category.
Okay, thank you.
Pat?
Thank you. Similarly, on the AR receivables on page 9, I see that we have a gross and a net receivables that have been tracked historically, but the bad debt seems to just increase year after year. Is that an indication that there's no process to clear that at some point, where we completely write off as not collectible? Or is that just simply a ratio of some gets added, but some it gets taken off every year?
A little bit of, so, it's quite a bit higher this year because of that slowdown in collections and the billing issues. A lot of it just kind of has to do with, as your runs have grown, as that revenue has grown, that bad debt's going to go up, because when you look at the bad debt as a percentage of revenue, kind of dropping out the spike in 2023, it's generally been around that 55% range. So it's kind of a factor of what your gross revenue is, because with EMS, you have your run fees set, but whether it's Medicaid, Medicare, private insurance, there's rates that you're getting paid, so that's kind of built into that bad debt sometimes, ends up factoring into that. And then it comes down to working with the billing company to make sure you're keeping those agings current. Now, this year is a bit of an exception. I wouldn't expect things to continue this way. I would expect some of these numbers to come down. But yeah, it's a combination of multiple things with the age of the receivables, with the growth of the revenue is going to lead to a higher bad debt, just kind of naturally.
So as far as that last ratio, you mentioned bad debt as a ratio to revenue. Are there targets that we're aware of in the industry as far as collection success, that kind of thing? So, obviously no one wants to continue on up from 63%, but, is that something that's a trend in the market or a trend in just the state of reimbursements from various insurance sources?
So I can share some of that. So with the comparative, there's a report that all the Dane County EMS agencies get every year. Some people share that information, some don't. It gets a little more complicated on whether we use all the same terminology or not. As Brett talked about, so, there are some agencies who look at that Medicare, Medicaid allowance that we will never get, right, as part of their income, and say, well, that's we only collect 43% because we know we're going to write that off. There's some people who take that out of there and say, yay, we collect 90% because they never even consider that it's collectible. So part of that, it gets to be a little squirrely, I guess, about all, not apples to apples. Largely, I have tracked it over the last couple of years. It's been a little bit more challenging, as Brett said, with the transition to the new billing company because I don't get the same reports. But we have historically, for everything we bill, and so when I look at it, historically have included knowing that we're never going to get the Medicare, Medicaid stuff. We're right at about a 43% of everything we bill. We collect about 43%. And for us, that's been fairly consistent over the last, since I've been tracking it. So about 6 years. Compare myself to a couple of the other agencies as well. We're all between that 40 and 50% if you look at the big picture stuff. Yeah, it's been a bit of a hiccup and a known problem here that bad debt over the last 6 months. Well, we're coming up in just about to a year now, trying to get that cleaned up. I think that answers your question. So, yes.
And
Thank you.
And with the other, we audit several in the area of the Dane County EMS districts, and that's kind of what we see. I would agree with what Patrick said there. Between 40 and 50% is what's collected.
Are there other questions? Please.
So I'm new, and I just have a question because I run a lot of balance sheets. Is there a way, as I have a mother-in-law who is on Medicare and had an ambulance run, that we do or don't bill the person that the run went with? I mean, Medicare covers a certain amount, and then they would send her a report saying you may or may not get billed for the remainder of that bill. Is that something that company you're working with follows up on, or is there a way? I mean, for me, that 55% is pretty high, and I would love to find a way to bring that down, but that's me and my balance sheet. So
Sure. So our billing process is if we are able to obtain insurance information at the time of service, which our medics aren't saying, sign here, can I have your insurance card when we drop them off? Largely, I'd say the vast majority of the time we get a face sheet from the hospital that has patients' insurance information on it. Sometimes it's correct, sometimes it's not. If we can get that information, we get a signature, all that's provided to our billing company, and it is directly billed right away to the insurance company, regardless of what it is. That's the easiest, best, most efficient way to do it. If we're unable to get that information or it's bad information, then our patients get the bill. They get a bill with a sheet that says, please provide us with that insurance information. From there, it's a 30, 60, 90-day process. It will create a bill every 30 days, first notice, second notice. On that third notice, they get another 30 days, and then it actually does go to a collection agency. I would have to pull again, I don't have good numbers for the last year on what it is just because of that transition between the two billing companies. I don't know that answers your question. That is our billing process. So yeah, they will bill Medicare. The patient will get their if we have the information for a supplemental, it will go straight to them. If we don't, the patient will directly get that bill.
okay, thank you. Yep, that answers it. And then because of the transition, like I said, I'm fairly new with this new company. Do they have any type of liability insurance to cover the issues that happen with them not billing and covering some of that? Or was that something that you have to work through with them?
That is just something we have to work with it was just a kind of eating that.
Patrick, with Medicare and Medicaid, this is going back to when I was a physician, we used to call it accepting assignment for Medicare. Like if you accepted assignment for Medicare, you would accept whatever Medicare would pay you, and then you weren't supposed to go after the patient for the rest of the fee. That's more or less what we do, isn't it?
Correct.
Yeah.
Yep.
And same thing with Medicaid.
Correct. We pay what they pay what they allow, and we accept what they allow, and we bill for what we are allowed to bill them
Yeah,
for.
and then that's the end. We don't
That's
show
the
that
end.
as bad debt or
I don't know.
That's kind of one of those, like you were saying, I honestly am not 100% sure if it's, I think I have some that do it one way, some that do it the other, that would show the gross and then show that whatever they're not going to collect just as part of that bad debt.
I don't
Others-
believe we show it as bad debt. We just, it's never going to be
Yeah,
collectible.
it's just not going to be something we collect, so it's.
Correct. Now,
kind
they
of-
don't
yeah.
pay their $75 copay, then it rolls over to bad debt.
Yeah, okay.
Generally, what do we use as our definition for bad debt? How do you define bad debt?
So for I guess this might be different going forward now that you're on a new company, but in the past with Three Rivers, they provide an adjustments and write-offs report, and that's generally what we've used for the bad debt number. So that's a report coming right from the past billing company from Three Rivers.
And we are just now starting to get that report.
Right, so
The transition has taken long.
yeah, it could look very different this next year, just depending on how the new billing company, how it's going to work with them, because they're, the billing companies all do it a little differently, and district to district, it's going to be done a little differently too, as well.
Okay, thank you. Are there other questions for the chief or Brent?
I think the fortunate thing for EMSMC is they're a national billing company. This is what they specialize in. And they do, I would guess, probably 75% of the services in Dane County. They literally went through and purchased every small company out there. And so the comparisons probably will be a lot easier in the future because we'll be, they'll have all the other companies to compare to.
Yeah, I think with the other ones, they were all on their same billing system through the end of 2023, and then I think that transition is going to be in 24 because of the, unique circumstances of Three Rivers. That transition happened earlier for districts that were using Three Rivers previously. But yes, they did. They bought everyone.
Any other questions? Thank you very much. Well done. Moving on to the agenda item 6, the chief's report.
Sure, so I'll pop it up on the screen there for you to see. This also got emailed out. Right, the highlights that I usually hit up there, we were a little bit higher last month, 414, so we were 6% above the month before, but we had a couple lower months there. So overall to the year, we are about where we were last year as far as run volume at 0.8% above. So pretty steady from last year. Other big numbers there is the year-to-date trucks are all trucks on calls for the month before. I was pointing those out things, right? So it was 18 times in May where all of our ambulances were out on calls, right? Leaving us no additional assets if calls would come in. And then that 14 times this year, all of our trucks were out on calls and additional ambulances, usually from the city of Madison, although Belleville had to come in a couple times, had to come into the district to take care of our calls. So numbers we like to watch as we look at potential for future growth here and taking care of our own district. Otherwise, it's the usual data stuff coming in there. Falls is usually the number one. Sick person dropped a lot for the first time in forever. So I don't know if more people were fainting last month than anything else, but that jumped up there. Falls continues to be our problem. We still see our biggest truck being the one right in the middle there. Building off of what Brent had just kind of said, there is our aging report. As you're very aware, that 180 days thing is over where we want it to be. That's still something I continue to work with. We meet monthly with Chrissy, who is our customer service executive, sales rep, whatever her fancy title is, and continue to kind of address that with her. That's really our priority is to get that down. But you can also see from the 0 to 30 days, they're really catching up on the newer stuff. A reminder that the aging report up there, that is not from the date of service. That's the date of the last action. So if they billed, it took us 3 months to bill Medicare and get that payment, and now it rolls over, as we talked about, the patient's $75 copay, that actually goes back to 0 again because we got paid on one thing and now it's going back to 0 to collect the rest of it. So that's not like those are calls within the last 30 days, 30 to 60, 90 days. That's payments that are being collected ongoing. Cash on hand, we're sitting in a good spot. The invoices for the second half of the year did go out to the municipalities, so we'll see that money in July. That will go back up. There was a big jump in the savings account this month. What we did, and it's down below. Just to explain, we used to have the $24,000 that you see in the GASB report that Brent talked about, and one of our assigned funds is labor negotiations. We have $24,000 every year. We put $6,000 in there, so that on the off chance when we have to do contract negotiations, there's not a spike in labor or legal fees every 3 years when we have to do our contract negotiations. So we put the same amount away every year, and then we tap into that fund. The fund, originally, we did have it with that WISC account, it's an investment account, that bottom line there, that assigned balance fund. It's a little harder to pull funds out of that investment account because it's an investment account. So what we did is actually take Michelle took the $24,000 for our labor contract and actually put it into our savings account. So when it's going to be significantly easier to pull that fund, that money out of there. So essentially, shell game, moved it $24,000 from one line item and put it in the other line item, just so it's actually much easier to access. So that's why you see the big jump in the savings account. The CDs that are sitting there, that's part of our reserve fund. They're collecting a higher rate of interest than anything else. There's the FAP funds that Brent talked about. We did get those now for fiscal year 2024, so that's why that is back up to the $9,000. No EPIC grant yet, and then there's that $24,000 labor contract. So you see it here as an assigned fund, but it lives in the savings account. And then that WISC account, that is now entirely for the post-retirement healthcare funding. So you'll see that's our total balance of where we're living today. Last stuff, no donations in May. I love the June milestones. We got some pretty big ones during June. Molly Jesberger is one of our full-timers. That's 22 years as a full-timer and a part-time. Tom Bates is still our last remaining volunteer. Rides about every other Sunday for about 4 hours. Has actually been here for 34 years. And then we have two of our full-timers, Ryan Roberts and Jamie Ennis. That's 4 years. So they are currently full-timers, but started as part-timers. And then Cam is one of our LTEs. He's also a full-time Fitchburg firefighter. So he's been with us for 4 years. No updates on the ambulance. They're still telling me November. I'm not going to continue to hold my breath that that's going to be November, but it's still going to be November. And then quite a bit of shout-outs. So we actually did complete every 2 years, if we go back historically, when all the EMS services were actually insured through Dane County, part of Dane County's insurance required us to complete a driving course. When we started insuring ourselves, as most agencies did, we just kept that requirement, right? Every 2 years, they would have to go through and do a driving course. We used the same driving course that we'd used for decades, which is really just an obstacle course. They drove as fast as they could get through it, knocked over a bunch of cones, and then they were done. Kind of looked at the reality of unfortunately, what our staff are hitting, right? And unfortunately, it's not things at high speeds. It's slower speeds. It's maneuvers. It's corners. So Harry Barger, who's, if you know, used to be Verona Police Department, was actually the Verona Fire Chief for a while, works full-time, or he's retired for the third or fourth time, for those retired people who are aware of that, right? So he works full-time at Madison College. Actually, he actually teaches driving for the law enforcement academy out there. So he actually came out, Epic graciously lended us one of their large parking lots and set up he did about a 45-minute reminder of all the driving laws, which we haven't had in a while. And then it was more of a slow speed obstacles, backing, turning, swaying. So Chance Kazmarski, one of our lieutenants, coordinated with Harry to get that set up. So a huge shout out to him that was a lot of work to get that narrowed down. We got almost all of our staff. Yeah, so 36 of 45 some staff, and then we had some out on leave. There was reasons, so we're working on making a make update so that we do get everybody through there for that safe driving. Jeremy and Chip of Verona PD has a bike rodeo every year, so Jeremy and Chip represented us there. And then Vanessa and Mandy, the Kids Building Wisconsin down in McKee Parks, which has just grown into a phenomenal event. But we had an ambulance down there. They really call us down there just because of the liabilities of all those kids and heavy machinery. But because there's a cool ambulance there, they end up crawling through it anyway. So it's kind of a dual role. One of the Verona firefighters did shoot me an email. They did have a structure fire back on 5/24 and said he really appreciated that Ross and Christie came out and set up a really good rehab center for the responder rehab. One of Ryan Robertson's, one of our full-timers, one of his coworkers put that one in. Actually, he just finished up his Bachelor's of Science in Fire and Emergency Management with a 4.0 grade average, so good for him. And then got back from, again, Verona PD. Andrew Jensen did kind of an impromptu. The PD does a public safety cadet program, and I don't know that it was announced or if they just showed up at the station, but got a shout out to Andrew Jensen for giving that public safety cadet group a tour of the ambulances. And he's also a Verona firefighter, so was able to give them a tour of the station as well. So lots of good shout outs for the good things that our staff is doing this last month. And any questions for me on that?
I have a question.
Yeah.
Just checking on if you're going to move that money into the savings account, are you getting any interest if you're going to hold it in there much or nothing at all?
I have to go back and see what the savings account is. It's not great. That's largely why we took the reserve that we used to sit in the savings account and put it in the CDs because we were getting a better interest in there. So it was kind of going back and forth with the $24,000 of the ease of access for actually getting interest on it, on money that we really only use about every 3 years. So there's different options to do with that. So it savings account does earn interest, not a lot.
Okay. And like I said, I'm new, so I'm asking questions. Are you allowed to put that money, are you, I guess because it's a public entity, keep it with one particular banking institution, or can you use different banking institutions?
We can do whatever we want. Well, what you can do, whatever.
Well, yeah.
I can do whatever you want. I do have a pending question out there, but so all of this right now actually sits, with the exception of the WISC account, which is Wisconsin Investment something co-op. They work with government entities. Those funds sit there. All the rest of our accounts do actually sit at Oak Bank. So the question does actually come up about FDIC insurance. So our checking account lives at $250,000. Anything above that, they daily on their own move things in and out of that checking account to maintain $250,000. Everything sits in that money market. My understanding, as we met with them a few years ago, is that money market actually doesn't live at Oak Bank. That money lives at other banks to the extent of $250,000. So this money sits at Cross Plains, and then Cross Plains has $250,000 that live at Oak Bank. So back to the shell game of the money, though it lives there, it doesn't really live there. So if something tanked, all of those funds are protected. No, we are not restricted to doing one bank. We can use other banks. The question that came up, I still don't have an answer yet, is the FDIC insurance on all those CDs that do live at Oak Bank, and that, right? So we do have a significant hundreds of thousands of dollars above the $250,000. So that is on my radar to look at and make sure that we are insured. The long answer to your question.
Okay, thank you. Currently, I think the CDs at Oak Bank are at 4.25 because I just was there yesterday. But I also know that U.S. Bank is running a market yield account that is liquid, and they're at 4.25. So just out there, I do it. I'm the banker, so I know some of these things, and I was just there yesterday, so it's great.
We did renew one of the $200,000 did get opened up last year when it was 4 point something.
Yeah.
And then the other two do renew in February, and we did renew them at the higher rate.
Yeah, awesome.
So, when we get to the budget line item, which I think I did put on here, the interest we did include for next year went up significantly because we got a pretty significant interest rate on them.
Are there any other questions for the chief regarding his report? If not, thank you. Well done. Moving on to subcommittee reports. I also the committee chair for the Personnel Committee. We did meet last week on the 5th, and we were reviewing in the policy update titled Work Period Wages, Overtime, and Other Compensation, Non-Represented Staff. We agreed to some format changes, which that policy was provided as part of the board packet. We also discussed the process for this year for the chief's performance evaluation. Last year was first year, this year second year. We're going to make some improvements on it, but it was just a conversation about how we're going to do that. Any questions? Finance Committee, did you meet?
Yes, we met yesterday and spent the bulk of the time reviewing the budget, which I think we're going to present now or at...
Yeah.
All right, and
Yeah,
I guess
we'll do it now.
you're going to present it, right? I'm not going to do it. All right.
Sure can. So it was in your packet, and just so kind of as a reminder, so this is the draft, the preliminary one, so there's no action on this tonight. It's just me sharing with you what myself, Michelle, and Jeff have put together for next year. Sharing it with you. If you have questions, suggestions, or need to take this back to your councils for consulting, whatever that needs to do, next month we will come back with a finalized copy that you will vote on to approve for the municipalities. The reminder again that the commission approves submission of the budget to the municipalities, but our budget still has to go through the normal budget approval process at the municipality. So just because you approve it, thank you if you approve it, but your peers on your councils and boards still actually have to approve it through that process. So that's how the process works. I did we can look at the big spreadsheet when we're done here, but just for ease of use, I did hit the highlights and kind of the big changes to that summary. It's just easier to look at than the big spreadsheet. As Brent had talked about, there's two ways to look at estimating run revenue for next year. One of them is a numbers formula, so truly kind of a best guess on what our call volume would be. And then based on the data from the previous, usually about the previous 12 months, right? How many of those calls of all of the times we are paged out the door, we only about 60% of them actually generate a bill. So of those 60%, then we actually break that down into what is historically billed for residents, non-residents, advanced care, basic care, mileage, supplies. Look at all of what that breakdown is and apply that as a best guess to that run volume. That gives us an anticipated generation of numbers. And then take that number. We also look at actual real dollars in for the previous 5 years. So, right, what really came in the door versus what Excel said was coming through the door. And then I take the number halfway in between. So it's truly a best guess, right? We could end up with a 20% increase in calls. We could end up with a 10% decrease in calls. But based on that, that's where that run revenue is generated from. Keeping in mind that July 31st, October 1st, when the state of Wisconsin, so that will generate a number what the municipalities guess would owe, right? We take our run revenue minus what we earn in interest, what we earn in anticipated special events. What is left then gets divided by the municipalities by equalized value. Since we don't have those numbers until August 1st, everybody's going to see the same increase on the spreadsheet. That will change when we get that equalized value. That's how revenue is estimated. Expenses, then, right, the biggest one we usually see is the salary line item. Based on this is 2025 will be the last year of the current collective bargaining agreement, so it'll be 2.75 increase for all represented employees. Plus, there's an additional, they have longevity increases built into their, since we only have the 21 represented employees, each one of them is line itemed to figure out what that salary is. One of the things we talked about a few months ago was negotiating a field training officer pay. So that's something once we kind of get the budget processed, we'll bring back to the group for a memorandum of understanding and working through the potential for providing a field officer stipend. So there's funding in there for the budget to make that happen next year, because the budget process happens before the MOU. If we can't come to agreement, it doesn't go in there, but now is the opportunity to put that in there and determine what that is. So that still needs to be finalized, but I did put funding in there for that. Third budget line item is there what we've talked about the last couple of months, the adopting the non-represented pay scale for the city of Fitchburg for our non-represented employees, which is essentially the deputy chief, the chief, and the office manager. So that's the policy that you just talked about with Derek. So those increases are in there, and then we did do some additional wage increases for our part-time paramedics and our EMS interns, just to stay with kind of market value of what our other agencies around us are doing. Health insurance assumption, every year we've done assuming an 8% increase and a 4% increase in dental. That is based off of the actuals from last year. So if we actually look at the spreadsheet, I think it actually did go down a little bit, because we put the 8% in last year. If it really only goes up 1%, then we build upon the 1% it went up last year, so it doesn't just keep creeping up. Those are assumptions. Additional radio, just the cost of our technology, radio maintenance, updating with our licensing fees. We'll be adding a 6th ambulance into the fleet. So there's some additional costs that go with the technology of adding that in there. And then if you remember last year, there was a year purchase of $11,000 to replace our Knox box key boxes. That happened this year. So that $11,000 came out of the budget for next year, because it was a one-time purchase. Helped balance a little bit with the rising cost of everything else. Same thing with the medical equipment, continued cost of just purchasing medical equipment, as well as the preventive maintenance fees that we have on our cots and our loading systems. Like everything vehicles, the cost of repair and replacement parts just continues to grow, and finding out that it's really a better investment to purchase the preventive maintenance agreements. When big things break, then they are covered, and we don't have these huge expenditures to get that stuff fixed. Similar to last year, just the rising cost of legal fees based on non-contract related legal stuff. And then over the last 2 years, because of the economy and the ability to put in, to utilize the tax levy limit exemptions, the municipalities put in over the last 2 years additional funding to get us up to, Brett talked about that unassigned balance. In the intergovernmental agreement, it is required for us to maintain a reserve of 15 to 25%. So we were down towards that, I think 10%, 13% a couple of years ago. The last 2 years with that additional funding, as you saw in the audit, we are up to that 24%. So there was a significant chunk put in there last year to help get us to that 24%. So we were able to take that chunk out this year, which helped absorb some of the increases. That's the summary that goes through this, so you don't have to look at this line by line. So this is what it looks at, anticipating about a 5% increase in run revenue based on call volume and collections. So the line item that most of you want to know is that one right there. What is my municipality going to end up paying? So it's about an overall 1% increase in what the municipalities paid last year. As of this point, right? That will change when equalized value is published at the end of July, and who knows what it is. It will change. So there's about a 3% anticipated rise in revenue. This is what it overall looks like for wages and salaries. That wage line does include the deputy chief line again for next year. And then just the operational costs down here, these things down here that are minimal to control the rising cost of replacement parts for our aging fleet. Couple of different things, as I brought up yesterday, the price of crayons and coloring books has gone up a lot, right, for all of our PR events. the removal of the Knox boxes, which brings us to about an increase in a 4.2% increase for our overall expenses. So overall expenses, about 3.5% increase, seeing about a 3.5% increase in revenue, gets us to almost a net zero budget. So that is, you've got a copy of that. Does anybody have any questions for the moment? Or again, the plan is to let you rest and digest that over the course of this month, take it where it needs to go, so that next month we'll come back with any edits or additions for approval for submission.
A question on the Knox boxes. So I know as a business, I'm required to put one in and put a key in it so people get into it. Do you charge for those then when you put them in, or those are free to people?
The business owners are required to pay to put them in, and then they are. So EMS also has Knox boxes as well. I think that answers your question. You're aware of what it's for, right? So if you're not there and your business is on fire, the fire department can get in. We have that same key largely for like apartment complexes. It's the same key. But if fire is not responding us to an apartment complex, no, we don't charge for the use of those. I think that's the answer. This is updating the equipment. So previously we had some key boxes because making sure that because there's lots of buildings keyed to that same key. There's lots of tight controls on that key. So it is actually secured in a box mounted to the ambulance and requires a key code to get it out. The boxes we previously had were not supported, no longer existed. So yes, yep, that's the answer to yes. All of our ambulances have that in there. They're just now set up on a wireless system. They're connected with our medication vaults. So the ease of now from Jeff's desk or my desk, I can see the status of every one of those keys and who accessed it and make changes from my desktop versus plugging into 14 different boxes.
Pat?
I probably should have asked this question last night, but help me understand kind of the nuance behind. So the municipality subtotal proposed or working is $2,046,477, but the proportion that is paid by each of the three entities could, some entities, some city, town, whatever, could see a change that exceeds or is less than 1.01%, or are you increasing? Explain to me how that balancing works.
Sure. So there's a better spreadsheet that I don't have that would explain it much better. So we know that the budget is going to be $4,044,607, whatever. On the other spreadsheet, it takes the estimated run volume, subtracts that, takes the interest, the contracted events, subtracts that, and then what is left is paid by the three municipalities. What you see there is based on last year's equalized value of, I think it's 55, 45, and 5-ish. On April 1st, we'll get the new numbers. And so that may change to 56, 44, and 6%. That will change those numbers.
So that makes sense.
Okay.
It will change those numbers that add up to the subtotal of 2.
It will still all add up to $2,046,477. The proportions will change.
Perfect. That was the part I was unclear on.
Yeah.
Thank you.
Any other questions for the chief or the finance committee? Okay, so to review, this is a soak month. We think about it. Next month it'll be on the agenda again as with with discuss and possible action to approve. What we're approving is you taking it to the municipalities, correct?
Correct.
Got it.
So this is an opportunity, and this will be sent to, I do have the timeline for Fitchburg. This will get sent to the municipalities. I mean, as much as you approve it, I do work directly with the finance directors.
Right.
They get, this is the copy they get.
Right.
So they will see this as well, but it's kind of your opportunity to introduce it as well.
All right. Any other questions for the chief? Then let's move on to the next agenda item, which is review and approval of accounts payable checks authorized by the chief. These were provided as part of the prep board packet. Any questions for the chief regarding those accounts payable checks? Do I have a motion to approve the accounts payable checks?
I'll make a motion to approve.
Do I have a second?
Second.
All in favor of approving the accounts payable checks, please signify by saying aye.
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 Anyone opposed? The motion passes. Next agenda item, Resolution 2024-1, approval of GASB 54.
So this is what Brent makes us do every month. As he talked about, there's some it's an accounting thing. Once we get the audit, this is a government thing that says, yes, we have 24% of our unassigned balance sitting out there. However, the commission is acknowledging that of all of those funds, there is money that Patrick can't spend, right? That it lives somewhere else. So these are numbers that are directly pulled from that audit that Brett just presented. The inventory, the prepaid expenses, and the contract negotiations for this year, well, that should actually be 24,000, will remain unchanged. The only number that changes here now every month through the end of the year will be the sick leave liability, and that's just because that's in the interest account, and every month will accrue interest. The other three are pulled from the audit and will live the same for the end of the year. You just have to say, for accounting purposes every month, that that's what that money is for. Just needs a motion first and second.
Do I have a motion to approve this resolution?
Now, I'll move that we approve the resolution 2024-01.
Thank you. Is there a second?
I'll second.
All in favor signify by saying aye.
Aye.
Anyone opposed? The motion passes. Next agenda item, discussion and action on Fitch-Rona checking signatories.
Sure. So Kate used to be our signatory. We have one from, and the makeup can be whatever. There's nothing that actually is dictated in our intergovernmental agreement. However we want to do it, however you want to do it. I am one of those signatories, but any check over $5,000 requires 2 signatures on it, with the exception of that policy that we approved about 2 years ago of the 4 or 5 checks that are going to be over $5,000, our health insurance, our billing, right, that are specifically listed in policies that only require 1. So anything other than that requires 2 signatures, or if Patrick decides to, take a European cruise for 2 weeks and we need checks signed, then you need to come sign those. Historically, there's been one person represented from every municipality. Kate was our municipal representative from the city of Verona. I would propose, if Pat is open to it, as the new Kate, that we do need to add another person onto that signatory list to bring us back to the 3. JR and Dave Fid are our other 2. So it doesn't have to be. It's not a huge responsibility. There's maybe 1 or 2 checks a month that come in there, but it does have to be approved by the commission, and then we start the process at the bank. So is there any discussion?
Any discussion on that topic? But to review before the open discussion is checks over $5,000 require 2 signatures, and those 2 signatures are currently you plus somebody that was Kate.
It can be 2 of anybody. It could be
Any
2 of,
commission
it could be
member.
2 of any of the 4 people allowed to sign checks.
Oh, okay. Who are the current 4 then?
Myself, Dave, JR,
Okay,
and probably Pat.
all right. So the discussion on the table is, are we okay with Pat taking on that role? Is Pat okay taking on that role?
Yes.
All right. Then do we need a motion?
I think it needs a motion, and then it ends up in the minutes. I send the minutes to the bank, and the bank will tell you what they need from you.
Is there a motion to approve Patrick Lytle to be added as a signatory for checks, Fitch-Rona check writing?
I will make that motion.
Is there a second?
Second.
All in favor signify by saying aye.
Aye.
Is anyone opposed? The motion passes. So we're going to move to closed session, so I need somebody to make the motion and read the words as written in the agenda.
I'll do it if you want. I'd like to make a motion to move to closed session pursuant to Wisconsin Statute 19.85, parenthesis 1, parenthesis C, considering employment, promotion, compensation, or performance evaluation data of any public employee over which the governmental body has jurisdiction or exercises responsibility, separation agreement.
Do I have a second to that motion?
I'll second.
All in favor signify by saying aye.
Aye.
Is anyone opposed? The motion passes and we move into closed session. We've reconvened to open session. I'd like to move to agenda item 13, discussion and possible actions on items discussed in the closed session. Do I have a motion? Patrick?
Yes, I would like to make a motion that we authorize the chief to proceed with discussions with the labor attorney regarding separation agreement.
Is there a second?
I'll second.
All in favor signify by saying aye.
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 Is anyone opposed? The motion passes. Next agenda item, other business is allowed by law. Is there any other business that we need to discuss? Looks like no. Then we move on to adjournment. Is there a motion to adjourn?
Move to adjourn.
Is there a second?
I'll second.
All in favor signify by saying aye.
Aye.
Anyone opposed? The motion passes and we adjourn at 8:20.